the side of learning forex. So today we're going to talk about order blocks, and when we talk about order blocks, I'm going to teach you how to identify the order blocks on the forex market, why we need the order blocks on the forex market, and what, why, when, and how to exactly you're gonna use the order blocks in the forex market. So before we get started, make sure you have a pen, and a paper or a notebook. You can write down the key qualities of anything I'm talking about. So without wasting time, let's jump into it. So order blocks are confluences we use in the forex market to our entries in the forex market. Let's say, for example, we analyze our forex market. Let's say, for example, we analyze XAUSD, or we analyze any forex pair or any metal, any indices. We're going to use order blocks as our entry points or as our confluence. So what are order blocks? Order blocks are consecutive candles that takes out liquidity or fills liquidity. Any candle that takes out liquidity or even fills liquidity, we talk it as an order block. It can be bullish or it can be bearish. For example, here, let's say, for example, this is our liquidity zone. We have the buy side over there. We have the sell side over here. So the market moves from sell side, right? The market moves from sell side, goes to the buy side area, comes back to the sell side, then goes to the to the buy side. Sorry about that. Then takes out liquidity, comes back down, and closes, right? So when we talk about order blocks, what do I mean? The candlestick that took out liquidity, this candlestick over here. When I say took out liquidity, what I'm trying to mean is that the candlestick that the body went outside the liquidity zone and closed above, right? Either buy side or sell side. It can even happen on the sell side right over here. Let's say, for example, this is a bearish one over here. So these two candlestick, this one on the sell side took out the sell side liquidity. We are going to use it as an order block, and this one over here, we're going to use it as an order block. Hope you have understand. Another concept of order block is it takes out highs and lows and fills in liquidity by filling fair value gaps over existing order block. So when we talk about filling liquidity by fair value gap, let's say, for example, we had an FVG here. There's the first candlestick, the second bearish candlestick over here. We have the second bearish candlestick over here that left the fair value gap over here. Right on over there. So there we have this fair value gap. Hope you won't mind the background noises over there. Okay, so this is our fair value gap right here. And this fair value gap, if you scale into the lower time frame, it has the lows. So the lows over there, when the market comes back, let's say, for example, it was bearish and we had the lows over here, the market will come back. As it takes out the low, it creates an order block, and the order block, you're gonna use it to continue to the other side of direction. Hope you have understand. If you haven't understood, you can literally replay the video or you can ask questions about it. So my work here is to make you understand forex market easier than watching a lot of YouTube videos. So this video is not gonna be long enough. I've literally explained to you everything you need to know about order blocks. Okay, so once you understand that an order block are consecutive candlesticks that takes out liquidity or fills liquidity, then it becomes easier for you to analyze the forex market. So I'm going to use an example on a live market here on XAUSD, though we're going to replace some so that you can understand how it works. So let's say, for example, this is our gold trade over here. I'm going to show you how you'll use order blocks as your advantage to take trades in the forex market. So once you open your chart, let's say, for example, you wake up early in the morning, you want to analyze the charts So the first thing you need to do, you have to analyze the markets on the higher time frame. When you analyze the markets on the higher time frame, what do? What we do here is we're going to look at for structure. That's the first thing. What's the structure of the market? The market is bullish. Okay. Once we see the market is bullish, we're gonna scale in to the monthly time frame. Yeah, scaling into the monthly time frame. And when we come to the monthly time frame, what do you see? The first thing you see here, we have a fair value gap over here. Then the fair value gap was taken out with this candlestick low. Then the candlestick closed above. I taught you why. I taught you the meaning. What is the word? What is the word? What is the word? I told you why, or I told you if the market. So, for example, this candlestick over here closed above. After it closed above, the body closed above, which means the market is changing direction. We have a fair value gap over here supporting the market to change its direction over here. Then we scale into the weekly time frame. Once you scale into the weekly time frame, what do you see? I've taught you about order blocks, and I know you understand right now. What did I say about an order block? Is an order block is a consecutive candle that takes out the low or high. For example, here, these three consecutive candlestick, 1, 2, 3. The third candlestick took out the low of this one. While it took out the low, it covered this fair value gap over here, right? This fair value gap over here was covered. I don't want to put a lot of drawings, it might confuse you, but I hope you understand. So this is an order block. So for example, for if you are trading this forex market, once the candlestick took out the low, then it tells you the market is reversing on the other direction. But as a day trader, you won't take out these trades. This is a swing trading. So I'm gonna take you through the lower time frame. So we scale into the daily time frame. As we scale into the daily time frame, what is our work here? Our work here is to identify the order blocks. So right over here, what do you see? This low over here was taken out. This one over here, the low was taken out. We have a fair value gap here. Order blocks and fair value gaps, they may consecutively, or they may be around each other, if that's the word I have to use for you to understand. Yeah. So I said the last candlestick or consecutive candles that takes out the low and high. So right over here we have a high. This is our high right over here. High, then the low was taken. This candlestick, it's an order block. So what we expect the candlestick or the order block is maybe the next candlestick to reverse, goes down, then takes out the high as the market continues. Then we scale into the 4 hours time frame. Scale into the 4 hours time frame. Let me repeat it. No, let me not repeat it. Right over there. Then scale into the daily time frame. I want you to focus. We want to find out order blocks on this market. So this one over here is an order block. Since we are on the daily time frame, we are going to scale into the lower time frame to find order blocks on the order block of the daily time frame, so that we can use it as our confluence on our entry, because we cannot enter on our daily market since we are daily traders. So what we are going to do is scaling to the 4 hours. Right over there to the 4 hours. What are we waiting for the market to do? We are waiting for the market to take out this low. As the market takes out the low, the last candlestick to take out the low, that's our order block. Okay, right over there. Which is the last candlestick that took out the low? This one over here, that's our order block. So we're gonna mark it. This right over here, it's our order block right here. So let's scale into the 1 hour time frame, where we want to find the entries. On the 1 hour time frame, what do you see? As once we marked out the order block from the daily and the monthly, or where did we mark our order block? From the monthly to the daily. We expect our order block to come back and retest Oh, sorry, I did not say we expect the order block. We expect the market to come back and retest the order block. So the market did come back and retested to the order block, and we have another order block on the 1 hour time frame. So this is how we check out the market order block. So the market, we started analyzing the market from monthly, we scale into the weekly, we scale it into the daily, we scale it into the 4 hours to the 1 hour time frame. Now we are on currently on a 1 hour time frame. You can literally take trades on the 1 hour time frame if you're a day trader. So what did we wait for the market to do? We waited for the market to retest back to the order block. Let me show you the 4 hour order block that we are talking about. Sorry, but net is a little bit crazy. This one over here, the last candle that took out to the low, was our order block. So what we were expecting the market to do is to come back and retest, then goes up, targeting this high over here, the first high. We have another high as we go up, as we go, 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 as we, sorry about that, won't happen again. So let's get into the 1 hour. So what we expect to be done on the 1 hour, what do we expect, guys? We expect the market to come back, retest there, then we find our entries. What entries are we going to find over there? The long positions. Yeah, the long positions. And we're gonna put our stop loss down here on the order block. So let's see how the market goes. So the market buys, fools out people, those who took out the scalps, then comes back, retest, takes out the fearful traders who are trading with fear. Okay, once the market comes back and retests to the order block, what do you see over here? We see the candlestick sweeping liquidity low, then comes back and closed above. This is a topic called CRT. I'll teach you guys in the next topic. So forms of CRT, that's where we're gonna take our buys. And kaboom, that's how you become a dollar millionaire with forex trading. So you take your, where is our long position? Right over there. We took our long position, the low over there. Well, we're going to put our stop loss here. Then since it's gonna be a swing trade, but we took up the trade based on the daily right over there, then we take our trade, shoots to the next high over there. That's how you identify an order block. The high was taken. What next? Should we continue identifying the order blocks until today? Let's continue. So the market goes, since we are targeting the highs and lows, it goes. That's how easy you can make money with the order blocks. All you have to do is put a stop loss and TP and become patient with the forex market. Okay, then we have a low, then we have the market coming back to shoot down over there to the low. We have the low over here. It came back, we tested the last candlestick was our order block, then kaboom. Order blocks literally will help you identify a movement in the market, guys. That's how easy you could trade order blocks. Thank you very much for today. Hope there was a lot of consolidation here, right over here. But what do you see? Another order block. The last candlestick to take out the low, the market will come back to retest on it. That's where you're gonna take your entry and make your forex money and target the next high. So all you have to do is wait. Patience is key. You wait for your setup, the setup will play out and you'll make more money into the forex market. Thank you guys very much. Hope you've understood what I've talked about order blocks, and if you have any questions, feel free to ask. Adios, muchachos.